All right, so we will just wait for it to connect. We are streaming live into YouTube, Facebook, many other places. And so we're just going to wait for this to go live, and looks like we are good. So, Sari, once again, we are here for the Edmonton Market Minute. We are mid-April. We're April the 18th. And there's a number of things that we wanted to discuss today. So it's great that Sari's able to join us. Thanks for coming in, Sari.
Absolutely. Happy to be here. Thanks for having me.
Oh, my pleasure. And so why don't you tell us the main topic of what we're talking about today from the mortgage perspective?
Absolutely. So today we're going to talk a little bit about the foreign buyers ban, specifically because there's been a couple changes that have happened in the last couple of weeks. So I thought it would be a great time to kind of discuss what's going on with that.
Yeah, perfect. There's all kinds of flip-flopping going on in the mortgage world, in the real estate world. And so it's hard to stay on top of everything. So I appreciate you coming in. So basically, what is the foreign buyer ban and who does it apply to? Let's start with a little bit of background on it.
Absolutely. So essentially, the foreign buyer ban prevents non-Canadians from buying residential property in Canada for a 2-year period of time. So it was introduced January 1st of this year. So we're looking at around January 1st for 2 years. And it's introduced to kind of make it so that housing is more affordable, specifically for people living in Canada. So if we think about areas like Vancouver, where there's been a lot of foreign investment influence, it's driven the prices up of property. And so the government really wants to focus on making sure that pricing is affordable for those that are residing within Canada. So it applies to non-Canadians, including corporations and entities that are not listed in the Canada Stock Exchange and that are not controlled by Canadians. So it doesn't apply to Canadians, permanent residents, or temporary residents who meet the exception criteria.
No, perfect. And so Edmonton Oilers, we traded for a couple foreign individuals, and that probably made the biggest press in the newspaper, where all of a sudden we had these Oilers that are contributing and they can't buy homes. So they can't even call Edmonton home. And so it feels like that, this new shift should be able to accommodate them. Now, you've mentioned there are some exceptions. And
Absolutely.
so what does that look like?
Absolutely. So some exceptions would be temporary residents that are studying in Canada. So you have to be currently enrolled in a program, physically present in Canada for a minimum of 244 days for each of the last 5 calendar years. As well, you would have had to file income tax returns for those 5 calendar years as well. Another one would be any temporary residents that are working in Canada. So as long as they hold a valid work permit or are authorized to work in Canada and have more than 183 days left on the validity of it, then they'd be able to purchase as well. So both of those scenarios, though, you would have had to not purchased within the time that the ban was set into effect. So those are kind of newer guidelines.
Okay, perfect. And so what about those immigrating coming to
Absolutely.
Canada? So how is that going to affect them?
Yeah, so that's a really great question. So specifically, like there's a lot of stuff going on in the world right now, as we all know. So there's always going to be trials and tribulations and things that change to make sure that we can accommodate those that are coming in, as well as Canada has a large focus on creating a habitat for immigrating people to come here. So refugees, as long as they've been given a refugee protection or are protected under the Immigration and Refugee Protection Act, they're able to have an exception to that, as well as any refugee claimants and those that are fleeing from international crisis. So if you think of places like the Ukraine where people are leaving because it's not safe to be there anymore, as long as they're able to get refugee protection, or if they've received a temporary resident status, they can also purchase property here as well. Same with like people that are from accredited members of foreign missions, they can also get access to property. And then any non-Canadian spouses and common law partners, they're also eligible to get in on the purchase of property, as long as the person that they're with, their spouse, is a Canadian citizen or they're registered under the Indian Act or are a permanent resident or a non-Canadian for whom the ban does not apply to.
So that's a fair
It's a lot of information, I know. it's tons of information, but there's always, like I said, we want to make it so that it is accessible for people that need it. Essentially, it's just trying to make sure that we're allowing people to still purchase that need to purchase the properties. It's more so just preventing people from purchasing it so that they can drive the prices up in the market. It's really just about affordability for everybody.
Yeah, it almost feels like there was a knee-jerk reaction to make this decision without thinking through the process. So now that we're in the
Mm-hmm.
process and we see how it's affected other individuals, it's nice to see we've at least made those changes.
Absolutely, right? And like anything, there's always trial and tribulations, and there's always going to be things that change, things that work, things that don't. And so it's good that we're able to adapt to it and make sure that we are accommodating people as we see that the changes need to be made.
Yeah, no, I agree 100%. Now, are
Mm-hmm.
there any property exemptions in this?
Yeah, so it's more so, I would say, location rather than property. But any residential property that's found outside of a census metropolitan area or a census agglomeration, those are places that you would be able to purchase property as well. So we're thinking of places that are 100,000. So I guess a census metropolitan area, sorry. Those areas would be places that have at least 100,000 people and have 50,000 people residing in the core of the center. And then agglomerations would be like 10,000 people minimum. So if they're not within those regions, then we can definitely focus on residential property for people as well that might not fit into those other guidelines. So those would be an exception.
So in the Edmonton area, something like Mundare might be an example
Absolutely.
where they could buy.
You betcha. You think those small towns? Absolutely, yes. So anything kind of around, absolutely. Those would be places that they would be able to still purchase property.
Okay. No, makes sense.
Mm-hmm.
And so there has been some recent changes, as I mentioned, to the act. And
Mm-hmm.
can you tell me a little bit about some of those changes?
You bet. So vacant land is now exempt, so you can purchase vacant land without being a Canadian citizen. Same with like purchasing residential property for development. So now all non-Canadians can purchase property for development. Originally, it was only publicly traded corporations, and the reason that they changed that is because it really didn't align to the goal of allowing more development for new residential property to sprout up. And so that doesn't really align with the housing crisis and trying to tackle that. So they decided that now all non-Canadians can purchase for development purposes. As well, corporations can now make residential purchases with as much as 10% stakehold on the company. Originally, it was only set to 3%, but now they've decided, again, it wasn't really targeting the overall goal of allowing more properties to be developed. So they made that change just so that more and more people can qualify to help with the developmental projects that we're hoping for, like, for example, condo buildings, things like that, allowing more and more people to have houses accessible to them. Especially you would know, like right now in the market, there's a shortage of houses for people to buy. So it's nice to be able to develop more properties so that people have those options.
Yeah, no, and that makes sense. And especially in communities like Vancouver and Toronto, where
Mm-hmm.
they can't keep up with the demand. So, no, that makes a lot of sense. And I had
Absolutely.
recently read an article that the individual, though, spoke about we might be creating a pent up demand for 2 years from now. So all of a
Mm-hmm.
sudden, 2 years comes along, we change the rules and open it back up, and all these foreign investors can come back and buy as the prices have declined to back
Right.
spike the market. And so it
Mm-hmm.
was an interesting take and a thought that they're having where it might be a short term artificial deflation in pricing that could allow these foreign investors to gain some massive equity. And so it'll be interesting to watch to see the way it does change pricing. Now, the reality is we haven't seen price reductions in Toronto and Vancouver the way that they were expecting. And we're
Mm-hmm.
actually starting to see some increases again. So, no, that's pretty interesting.
Absolutely. And yeah, it's I'm sure that, like you said, like that's a very valid point. That's a great point. And I think the ability to really um change the processes and change what the ban looks like as things progress. I'm sure that that's something that they'll definitely take a look at to make sure that it doesn't create that kind of opportunity as well at the end of the 2 years. So
Yeah, it'll be interesting to watch,
it
right?
will be for sure.
It's completely evolving.
Yes.
Now, what I'm going to do is I'm going to share the screen because there's a few other things that I wanted to share today. First thing is an email that came out to us from the Realtors Association Edmonton. And it brought attention to the fact that Alberta land titles is delayed. Most people, most of the time, it's not an issue. But they did bring up a couple of issues that can be occurring because I've heard there is delayed as 6 months. So basically, I'm just going to go through the email. They've noted that please be aware that Alberta Land Titles Office is currently experiencing delays in the process of title transfers. So this may result in property owners not receiving tax notices for properties purchased since February 2023. So if you've bought a property February until June or July, you really need to be aware of this, okay? So if I'm acting on behalf of the seller, I need to make sure that the seller, the property owner, cancels their enrollment in the property tax monthly payment program. Because if title doesn't change, then the city isn't aware of it. So they're going to keep taking the money out of the account. Okay, so if you're a seller, make sure you notify the city as soon as the property is officially sold. Okay, cancellations may be submitted 2 weeks before the next scheduled withdrawal. Now, if you're acting on behalf of the buyer, which is me, ensure that 2023 property taxes are paid as part of the sale to avoid any penalties. So the purchaser, if they wish to enroll in the property tax monthly payment program, they need to do so in November 2023 to start the payments for January 2024. So what we want to do is make sure that we are notifying the right individuals, whether you're on the buying side or the selling side, to make sure that the property taxes are coming out of your account, either at the right time or not at all if you no longer own the property. So for any property owners who may not have information about their property taxes, they can contact the City of Edmonton to get their update tax balance by calling 311. It's also important that new owners pay before June 30th to avoid late penalties. So if you took possession of the home May long weekend, let's say the Friday before, and you've moved in, life is all good, your title doesn't transfer for 6 months, and all of a sudden you get a notice, hey, your taxes are due back from June, and you have some late penalties. So really be aware of this up until that June 30th mark when everything is due, that if you take possession between, say, February and end of June, July 1, you need to be aware and reach out to the city, whether you're selling your property during that time or buying your property during that time, to make sure there's no additional penalties or monies taken out of your account. So I thought that was an interesting take, and we haven't seen delays like we are having. And so I appreciate the board reaching out to us and bringing that to attention. What are your thoughts on the tax stuff?
I think it's definitely something that they want to keep in touch with and be totally aware with because it can cause delays and things as well. So I know lenders always want to make sure that there's nothing owing on taxes or anything like that. So it's something that I'm glad that you as a realtor are looking out for your clients with that, because it's super important to make sure it's all even keel and that you're not getting charged for things that you don't have anymore or that you're not in arrears or anything like that. So
now, I know that there are some lenders that like to build the taxes into the mortgage.
there are, yes.
And so is that something that you normally talk about?
It's totally, I would say, the client's choice. I always leave it up to the client whether they want to allow the lender to have that or if they want to do it themselves. Some lenders do want to have control over that because if the taxes are in arrears, it comes first on the priority statement for the mortgage. So that's not something that they want to happen. So some lenders like to have control over that, but for the most part, if the client is happy to set up their own tax account with the city, and that's the way they want to do it, they can do it that way as well. It just totally depends on their preference.
Yeah, exactly. And if you are the kind of person that likes it simple just to make one payment,
Mm-hmm.
talk to Sari, your mortgage broker, when you do get your mortgage put in place. And if the lender does that, they will take it out in one lump sum. So it'll be your
Mm-hmm.
principal plus your interest plus your taxes. It'll just be one payment every 2 weeks, every month, whatever you're paying. And you don't have to think about it. And then the bank will make sure that your municipal taxes are paid on time.
Absolutely. Yep. You got it.
Now, I wanted to share an article with everybody because this is rare. Okay, but it is real and it has devastated 4 families in the Edmonton area. And so it's an article in CBC, came up on April the 11th. And so I'm going to give you my take on it, the Cole's notes on it, and then we'll also drop the link in the description so you can go through and read the article on your own. So it's regarding a builder known as Three Evolution Homes. And they were a builder out of Calgary. And there were a number of little red flags that came up. So, number one, they were a small builder. And so, nothing wrong with small builders, but Sari can probably tell you there's a couple of different ways that we can finance new builds. One is called a draw mortgage, and one is called a completion mortgage. Sari, do you want to speak on the two, or would you prefer me to?
Absolutely. So a draw mortgage would happen in stages. So it depends on the lender for how many draws they do. But generally, it would be in different phases. From as soon as one portion is done, like let's say framing is done, they're going to take a portion of the mortgage and they're going to charge it out. And then the second one that would be maybe they've completed the drywall and the electrical. Maybe now they're going to take the next draw out and they're going to fund that part of the mortgage. So it kind of gets funded in stages as to where you're at with the build of your mortgage. Whereas a completion mortgage would be they don't take anything until you're actually completed and take possession of the home. And then you would take possession of your home and the mortgage would be effective at that time. So that's kind of the difference between the two.
Yeah, and it's really important that, thanks for doing that, Sari, because it's really important to understand that there are the two separate expectations, right? If you're having a new home built for you, most people say, I don't want to start paying a mortgage until I move in.
Mm-hmm.
There will be some time, it's rare. It's sort of with custom homes, or if you own the land already and then you're hiring a builder to build the home for you separate, that we would see a draw mortgage. Draw mortgages are typically, let's just say they're more unusual.
Mm-hmm.
Most
Absolutely.
of the time we say, okay, home builder, you need to have enough funds to be able to complete the building of the home. And then once we know everything is all good, then the bank says we will fund on it.
Mm-hmm.
Okay. And so that is important to understand for the story. Also, new home warranty doesn't begin until the people are ready to move in and we have basically the occupancy permit, same time as the completion mortgage. Well, something that was unusual that happened in this case, well, there's a number of things. Okay. So, first of all, they say 4 people who bought houses in Northeast Edmonton from the same Calgary builder more than a year ago say construction is stalled, leaving them responsible for mortgage payments on homes that they can't even live in. So CBC News investigation found more than a dozen stalled home builds in the Fraser and McConaughey neighborhoods, all linked to Three Evolution Homes. Okay. So there's more than 4. We've got
Wow.
a dozen families. 13 builds have had building permits canceled by the city of Edmonton. 9 of the company new builds in Edmonton have lost new home warranty coverage. Okay, so this is one of the challenges with dealing with smaller business owners. Now, unfortunately, it is my opinion that it looks like there's been a number of instances of fraud in the case. As you read through, you're going to form your own opinion, but it does feel like there are some questionable events. Now, as I scroll down, I'm just going to hit some of the highlights. Signing documents. Okay, so one of the unusual things that experienced is they submitted documents, including his T4, to a real estate agent. The real estate agent then provided that to a mortgage person. And to me, this is my take in the way I run my business, is I believe mortgage people need to stay in their lanes, realtors need to stay in their lanes, lawyers need to stay in their lanes. We all have expertise in what we do, and we really shouldn't be overlapping. That's why we bring in people like Sari to be able to share this information with you and to be able to walk you through the process. So they gave the T4s to the realtor, and later, somebody later called him to say that he's been approved for a mortgage. He said a man who identified himself as a Scotiabank employee called and asked him to sign his mortgage papers in person right away. The man had the homeowner sign the documents inside a vehicle of the parking lot of a Scotiabank branch in North Edmonton. And it actually worked out to be on a long weekend, if I remember right. The daughter went with him at the time. She said the man told them the bank was closed for holidays and signing the documents were urgent. Okay. I understand there are time-sensitive documents and that there's times that we have to take action. Many mortgage brokers will come and meet you in your home. Okay. This is one of the benefits of working with a mortgage broker. I have never seen an occurrence when a bank is normally closed and then they demanded you to come in and do business. So this becomes one of the red flags. Now, one of the challenges, these people were introduced to the builder and through the process through people in their church. I believe they were new to country and they didn't really know. So I'm trying to go over this article as a education for everyone as well. We can see a spokesperson from Scotiabank said no Scotiabank employee conducts Scotiabank business in the parking lot. Okay, so if they're asking you to work out of the parking lot,
don't do it.
Yeah, not always, but it's something that you may want to ask more questions. So then they were referred to Fort Law. Okay, this is something else that I want you to think about. There are many builders out there in the world that say, hey, if you use our lawyer, you will not be charged. Be aware that you are going to be signing a document saying that the lawyer does not look after your best interest. Okay, the lawyer is an employee of the builder, and you are basically signing away your rights to not have that fee. Here is a simple example of how $1,500 could have saved this man hundreds of thousands of dollars. And he's not the only one. Okay. So I'm a big proponent. If it's that tight that you can't afford the lawyer, maybe have some thoughts about buying a home and really just try and spend that extra money on a lawyer that is going to be able to, they're obligated to look after your best interest. Okay. So we see here, Fort Law's lead attorney told CBC News the builder referred the men to his law office and offered to pay for their legal fees. Okay. The lawyer was just under the impression that there were a few items to be finished. You know what? This property hadn't even been started. One of the scary things is they processed it as a completion mortgage where the home hadn't begun or had begun, but in very early stages. So what this meant is the homeowners were responsible for the mortgage fees starting immediately. Okay, their principal and interest started instantly. So they were paying mortgage and interest and their own rent during this time.
Wow.
Yeah. And so that shouldn't happen. Okay, there will be times with a draw mortgage that you will be responsible, but you won't be responsible for the whole amount. And most of the time, you will have had to pay for the land up front. Okay, so really be aware that if you're in a builder and they haven't asked you to pay for the land up front, you're probably not heading to a draw mortgage. So obviously, the bank is investigating, and this is where it gets a little crazy as well. So we see that there were concerns raised with Scotiabank as they later learned by obtaining the documents from the manager, that the bank had T4 documents with incorrect amounts for the income for both him and his daughter, who were both applying. The 2018 T4 he received from the bank. So he gave a T4 to the realtor. Somehow it ended up at the bank. That said one thing compared to what the bank gave him back and said, this is what you submitted. So the 2018 T4 that he received from the bank listed his employment income as more than $116,000, whereas actual income for that year was about half that amount. Okay, so to me, that suggests that there could have been some fraudulent manipulation of numbers. Okay, don't know it to be fact. I haven't seen everything in the case, and I'm not an expert on this, but this does raise concerns. Now, the bank's T4 for the daughter showed that she earned nearly $50,000 working for an immigration company in 2019, and his daughter, who was a student at the time, actually earned less than $1,000 that year. So these aren't little typos.
No.
And actually, they went and showed the 4 T4s, and the ones that were filed from the bank were completely different. So that's something to be aware of. Now, the law firm is suggesting that they unknowingly facilitated mortgage fraud. Okay, so they're saying they had no idea. Once again, very important to have your own lawyer. Warranty coverage was instantly withdrawn as they realized that this was going on. So there's no more home warranty. So the city has revoked the building permits. They're having to pay their mortgage payment every single month for a home that they won't be able to move into for a long time. As he says in this article, how can I pay both my rent and my mortgage payment? I have to let one go, right? There's so many of us that don't have the ability with everything else that's going on in the economy to be able to make 2-3 different mortgage payments.
No
and
kidding.
they don't have warranty coverage. So whatever work had been done, there's no guarantee that it's going to be continue to be supported. And the reality is every new home that gets built has to have a warranty before you take possession. And you can only buy the warranty before you start the home rather than at the last second. Okay, so it shows that the company has started 26 homes. Of those, 9 have had the new warranty withdrawn. So it's really important that when you're thinking about going into new builds as well, there are different warranties out there and there are different qualities of warranties out there. So if you have any questions on any of that, don't hesitate to reach out. I'd love to go over it with you and discuss some of the pros and cons of each of the warranty systems. And you can make a decision where you believe the greatest support will be. Canceled permits, we touch base on that. The city has canceled their permits, so they can't even go ahead and proceed with construction because they have no permits. Also, court documents show multiple companies in the Edmonton area have filed statements of claim against Revolution Homes Group, alleging the builder has not paid outstanding invoices. There's an example of Save on Labor Concrete, based in Leduc, Alberta, filed a statement of claim March 2022, alleging Revolution Homes owes it more than $140,000 in concrete work. It also suggests that some of the former employees are owed wages, vacation pay, etc. Now, I'm not an expert on this, but I would be concerned all of a sudden that a builder or a contractor can put builder liens on the property. So then passing this work on as well, and work that maybe they have to tear down. Okay, if you want more information on builder liens, I'd suggest reaching out to a lawyer. And they give you some advice for home builders. So find a realtor that you trust, find a realtor that you're very comfortable with. Make sure everybody stays in their lanes. You can, if you are uncomfortable with the process. So me being a realtor, I cannot tell you who you have to use as a lawyer. as a mortgage person, as a builder. Okay. If you want to go find those individuals yourself, that's fully in your rights. And if little red flags are starting to come up, you may want to think about that. So I kind of wanted to share this article with everybody because it's one of those situations that nobody ever wants to be a part of. It's rare. But as we see so many things changing with inflation, cost of labor, cost of wood, etc., you never know what's going to happen with some of these smaller companies. So please be careful and reach out anytime, ask any questions. Any thoughts on this one, Sari?
I think it's definitely a good reminder to do your research and work with people that you trust. Like every process is going to be different. And like you said, the process is different for a realtor than it is for a mortgage broker and through a lawyer. So always kind of do your research, find out who you would want to work with yourself. If you don't have someone, I'm sure that the professionals you're already working with can refer you to people. Again, you don't have to use them, but they're people that we would work with and we're comfortable working with. And it just, yeah, do your research on what the process looks like and be curious, ask questions. If you're not sure what the process looks like because you've never done it, maybe it's your first home, ask lots of questions to find out what it would look like. And then even get a second opinion from, like if you have a mortgage broker, go to a bank too. Like that's totally fine. But make sure that you're comfortable, Google who you're working with and feel comfortable and confident in your decision to move forward with them.
Yeah, I think that's a great idea, right?
Mm-hmm.
And get referrals from friends, family,
Totally.
if they've had good experiences, right? So sometimes, and obviously this builder, everything he touched didn't go chaotic. He's had some homes that have closed. He's had some homes that were not issues. And sometimes stuff happens and it's unfortunate. But I
Absolutely.
do have a concern when we start to see documents submitted aren't the documents that you get back, and so then that becomes, there's some questions in there as well. So, but that being said, be aware, ask lots of questions, and Sari and I are always here to give you our opinionated and biased opinions.
Absolutely.
I joke continuously that I'm a good Alberta boy, that I have a biased opinion, and I'm okay with you telling me that I think or that you think I'm wrong. So, but feel free to ask anytime, and I'll always give you my 2 cents. So now what we're going to do is we're going to look at YEG's weekly update. What's going on this week in Edmonton? So this is up to Sunday, April the 15th. And so I'm just going to hit a few of the highlights. If you want to download this report, the link will be in the comments below. Also, if you'd like to have a report done like this for your own neighborhood or the general area where you live, or maybe even you have a mom or a dad or somebody who's thinking about downsizing or making a shift, and they're curious what's happening in the market, just reach out to me and I'd be happy to do a market report just like this for you. Now, this is for all of Edmonton. So some of the keys to look at, we will see the inventory is down. Okay. So the total number of new listings that have come to market is down about 18.85%. So during this same week in 2022, we had 817 listings come on. This week, we only had 663. Now, it's just a week. Okay. So I don't think this is a very focused and tight look at what's going on. We also provide monthly and quarterly reports. You can watch those videos as well or reach out. But for somebody who is on the market or thinking about buying, receiving information like this can be very powerful and have them understanding what's happening. So we do see the listing prices are going up. We do see inventory cost is going down. Okay, so all that means is the total. So the average list price, if there were 10 homes at anywhere between 200 and 500, what they would do is total the total number of homes up and divide by the number of homes to get the average list price. Total inventory cost is that total of homes that are on the market. Okay. So it's just something interesting to see, because if we saw a decline in listings, but we saw an increase in inventory costs, that means there are more expensive homes on the market. Now, the other thing to be aware of, though, okay, and this is something that most people are missing. Now, I see it all the time on TikTok where we're hearing that, you know what, there's multiple offers going on and the market is crazy. Okay, that is not untrue. There are definitely some segments in the market that we are seeing multiple offers right away. I've had some poor buyers that were on offer number 5 or 6. They've competed on every one. Some of them have been 4% over list price, and they're still missing out. So there are times and segments of the market that is hot, but something to be aware of, the total number of sales are lower than in 2022. And we're seeing that week after week, month over month, quarter over quarter. And so even though the total listings are down 18.85%, the total sales are almost down 25%. So to me, that is telling me we are not as hot as some people are portraying. Okay, there are some segments of the market that are uber hot and other segments that aren't quite there. Sales average price, once again, that I don't like the average sale or average list price as a stat because it can be manipulated by a few $1 million homes so easy. Few less on the market, few more. The listing to selling ratio is interesting. Everybody always asks me, what do we expect to sell for, or what do we expect to pay compared to the list price? Now, this isn't a rule. All it's doing is letting you see what's happening week over week, month over month. As we go to negotiate for buyers, we will look in specific neighborhoods on stats like this, and where is that trend going? Now, an example is in 2022, people were paying almost 100% of list price. Now, all of a sudden, for this week, April 9th to the 15th, the average listing to selling ratio was about 97.3%. So $500,000 home, that's about a $15,000 swing. Now, be aware, though, that's not every property. There's going to be some properties that are priced so well, just like the ones that my buyers are competing with. On those properties, they were all selling for much over list price. So it's going to be home specific, neighborhood specific. This is just a general idea that we can look at to see what is happening in the market. As you download the report, we're going to go into everything deeper. So we'd see total listings, we'll have deeper in the stats, average list price, you go deeper, total inventory, all the way down. Now, what I want to do is I'm going to go right down to sales because I really like this graph at the end because it gives us an idea. Oh, did I miss it? Where are we here? Yeah, so average days on market. This gives us an idea of how long homes are staying on the market on average before they're sold and how we're comparing. Now, this is a week snapshot. The reality is when we do the monthly overview, that's a more powerful snapshot. But it's great to see that the average time on market is, in this case, I checking to see what we're looking at. It was 41 days. Okay. So, 41 days in 2022. And now, does it say here? I apologize. No, it said it's gone up 73%. So 3/4 of that will be 30. So we're up at around 71 days is what we're going to be saying here. So that is something to be aware of where homes are sitting on the market longer, okay, on average. That does mean the ones that are priced well, like we saw on the Sunday, are rocking. Things are moving quick. The ones that are fishing, you end up being out there for a much longer time. Average time on market is 71 days. So that's something to be aware of. Oh, yeah, and we can see it over here. So hope this helps, giving you some ideas on what's going on in the market. We've gone over a number of different things. We've spoken about mortgages, the new to country. We've talked about some things to be aware of. And also don't forget about the taxes. Now, Sari, I'm assuming you have no trouble if they reach out to you and have questions.
Absolutely not. Feel free to reach out anytime.
All right. So we will be putting the links in the comments below as well. And if you have any questions, please reach out and ask. If you need a second opinion for a mortgage, any objections if they call?
No, I love that. I always recommend to get a second opinion, especially if you're working with your bank. It's always nice just to see what else is out there, right? So not just rates, but also prepayment options, things like that. There's lots of things to consider.
Yeah, our mortgage is typically, or our home purchase is typically our largest single investment, right? Very rare are we going to write a check for anything more than what our home is worth. And so it doesn't hurt to get a second opinion. Rates, everybody wants to talk about rates. As Sari mentioned, it's, can you do a better rate? Can you do a better rate? But my opinion is it's really powerful to understand the terms, especially as we've seen the shift in the interest rate, where the interest rate is increased and people now are trying to get out of their mortgage. They're put in situations where they can't afford to be able to do this. And so all of a sudden, if they can't afford the $5,000, the $10,000 that the bank is calling for, then that can create an issue. Something else to be aware of that we recently had an issue with. We had a seller that went to their bank and said, what is the payout penalty? The bank gave them a number for the payout penalty. Then days before closing said, oh, we forgot you had a cashback mortgage. You haven't gone through your entire term. They couldn't afford to still be there for the full 5 years because the way the interest rates has gone. And so they also wanted the cash back on closing. These poor people were getting out of the house because they couldn't afford it anymore. And, why did they think that they could have an extra $10,000 cash laying around as well?
Right.
And so, once again, powerful to ask a whole bunch of questions sometimes. And I don't think it was the bank trying to be deceitful. It was
No,
just
not at
something
all.
they hadn't thought about. So they went into the bank. Bank says, yeah, okay, you're going to owe this much. They said, okay, great. We can afford to do that. Went through the entire process. And then the lawyer got the paperwork. And, oh, by the way, we forgot an extra 10 grand that you owe. So ask a lot of questions. Sari and I are here to help. We work with this every day. We see this every day. And we can hopefully create less sleepless nights for you.
Absolutely. Leave that to us.
Yeah. So thanks, Sari, for coming in. Appreciate your support.
Thank you.
Everybody have a great week.